Foreclosure processing problems have rocked the financial services industry in the past few weeks. All 50 states are now investigating whether mortgage lenders improperly sped up home seizures. There's a big question. What will the foreclosure fiasco actually mean for the housing giants Fannie Mae and Freddie Mac, which are behind, after all, more than half of all mortgage originations in this country? James Lockhart is here with me now. You remember him as the top regulator of Fannie Mae and Freddie Mac when the government took them over back in 2008. These days, he's working as vice chairman at W.L. Ross. So when you heard this story, it sort of started bubbling up, and then we saw a sharp reaction in financial stocks, this worry about what's to come. How much does this freeze on foreclosures hurt Fannie and Freddie right now?
Well, it certainly hurts the whole mortgage market, and Fannie and Freddie in particular, because they own over 30 million mortgages in this country. What it does is delays the foreclosures, and many of these houses have been in process for a year or two into foreclosure. They're deteriorating. A lot of them are empty, and it's really hurting neighborhoods. So it's not only hurting Fannie and Freddie financially because they're not getting the cash for those houses, but it's hurting neighborhoods and therefore the whole housing market.
So in some ways, the attempt at solution is amplifying the pain.
Well, if we're going to delay it, yes. I think what we need to do is get the paperwork right. I think there's no excuse for the robo-signing phenomena.
Do you think there was fraud involved?
I don't know if it was fraud. I just think people were cutting corners and really they were overwhelmed by the number of foreclosures. I think so far this year there's been 2.9 million foreclosure filings. And they were just overwhelmed, and some people just got sloppy, very sloppy.
Well, we've already known that Fannie and Freddie themselves are in conservatorship. You know, they have to be rejiggered in some form. What happens with the new Congress and these midterm elections November 2nd?
Well, certainly what happens in the House will have a big impact on the future of Fannie and Freddie in particular, and the Senate. Obviously, the Republicans seem to want to recast the mortgage market and put it back into private hands in a big way. Some of them want to do away entirely with Freddie and Fannie.
You get the Bill Grosses of the world who say nationalize it.
Yeah, I mean, there's a full range. I guess I'm in the camp that we need to get the government out of 100% of the mortgage market, which they are effectively today. So we need to figure out a private sector solution.
Do you think that gets done before 2012?
It's going to be hard. I mean, it took us 6 years to get the legislation to fix Fannie and Freddie, and we only got it 40 days before we had to put it in conservatorship. So, you know, it's a problem getting Congress to move.
Yeah. So you don't sound optimistic in terms of a timeline. Would you expect another 6 years in trying to?
I hope not. I think people understand that we need to, but right now we're in such a fragile mortgage market that people are afraid to really take any sort of serious steps.
We're continuing our conversation with James Lockhart, Vice Chairman at W.L. Ross, former U.S. housing regulator who oversaw Fannie Mae and Freddie Mac. Do you think that this concern about mortgage buybacks, repurchases, is overdone when it comes to the kind of pressure we've seen on financials right now?
Well, I think there was a lot of sloppy underwriting done and some fraud in those mortgages, and the investors have the right to put them back. Fannie and Freddie have been very active in their pools, and the private label securities market has not been as active. And I think it's a legitimate question to say, you know, you told me these mortgages were good, and they were not. You didn't do sound underwriting, and so I think it's a reasonable thing to be done. It's maybe, you know, we're seeing numbers $50 billion, big numbers.
Yeah, and that's with the BlackRock PIMCO consortium there, and that pushback to Bank of America. That was about $47 billion there.
Just there.
So talk to me about some of the smaller, not the big banks, the smaller banks. I know that that Florida lender, BANKUNITED, which is owned by W.L. Ross and others, there's talk of an IPO as soon as this week.
Well, BANKUNITED was a bank bought from the FDIC. It was an extremely troubled Florida bank. $11 billion bank, and probably the losses are going to be about half of that amount for the FDIC. When we bought it, there was an 18-month rule that you couldn't do an IPO. That's going to be up in November. We're also doing other banks. We have a bank in New Jersey, Sun Bank. We've done First Michigan in Michigan. And we're looking throughout the country because we think good, sound banks with good management teams and good local presence, good deposits, are going to do well in this economy as we recover.
So if that IPO does happen, the proceeds would be used to purchase some of the banks in those areas you just named?
I can't really comment on that.
But because we've heard from others who are in the regional banking sector who say, there's a lot of opportunity, particularly in the west of the country right now, but the New York and the Northeast, it's harder to find opportunities.
Well, the Northeast banking was safer. I mean, had less problems. But we did invest in one in New Jersey. We have, obviously, Michigan is a troubled economy, and we were able to do an FDIC bank there. And we're looking in California and the Northwest as well. So we've been pretty active in that area, and we will continue to be so.
And also active overseas, in Ireland in particular. The Educational Building Society is something that you're looking at.
Well, we've actually invested in Virgin Money in the UK, about a 20-some%, and that owns a small bank, and we'll be expanding and banking in the UK. But yes, we're looking in Ireland as well. And we think that there is an opportunity there. A building society is basically like a savings and loan in this country, so it's mainly residential mortgages. They had a big bubble in Ireland, but they have a pretty sound system. Mortgages are full recourse, so people don't walk away from the mortgages the way they do in this country. So we're continuing to investigate, and we'll see how that turns out.
So where do you think they are in terms of turning around the housing issue in that country? I mean, if you feel comfortable enough to go in and purchase assets, it sounds like you're a little bit more optimistic.
Well, the government there has really, I think, taken some very strong actions. If you look at what they've done, they've cut salaries in the public sector significantly. They're looking at reducing their deficit. They're taking actions on some of their troubled banks, but it's a work in process. We're hopeful that we're nearing the bottom phase, and that's when we like to buy things.
All right. Well, we'll keep track of what you do end up going through with on the purchasing front. It's wonderful to have you on the show. Thank you very much for coming on.